Let's talk about why you want to be the banker for your taxes. Throughout your lifetime, you're going to have so much money flow through your hands because of your income, and a very large portion of that will end up going to the IRS in the form of taxes, which is why we consider taxes one of the largest eroders of our wealth. And this is why it's so important to learn how to become a banker for all the money that's going to flow through your hands in the form of taxes. Now remember, banking is a conversation that involves controlling the flow of money. And so before we pay our taxes, we want to divert those dollars to our banking system so we control and harness the power of that dollar every single year for the rest of your life. And if you'll do this, if you'll change your paradigm around this, it will have such a dramatic effect on your wealth long term. So let's take a look at what most people do. Most people have their income, and then they take a portion of that income and they go pay their taxes. And then with what's left over, they take that money and they deposit it into their banking system, their insurance policy, their new savings account. But by doing it this way, we lose what Nelson called the interest cost. He said you finance everything in life. You either pay up interest or you give up interest. And by taking our cash and giving it to the IRS first, before we run it through our policy, what's happening is we're constantly interrupting the potential of that dollar. We never harness it long term because it's just flowing right through our hands and in the hands of someone else. And so if we would just change the way we think, we can actually harness what's called the interest cost, meaning whatever dollar flows now from your income into a policy, you earn that guaranteed interest rate on it for life. Then we're going to use the policy loan feature to go pay the taxes, but because we did it in this order, our savings continually increases over time in a very dramatic manner, and we can also generate a lot of legacy for the next generation. So let's hop over to the Truth Concepts calculators and let's take a look at an example on how this would work. So I've got a borrowing strategy calculator pulled up here, and we're going to assume we're going to look at a 50-year time period. This individual is going to be in their career or their business for 50 years, and we're going to be putting $20,000 into a policy, and this is the money that we're going to designate that will be used to pay taxes in the future. Now, a lot of times when you're doing this, you might not be able to pay your full tax liability in the first year of starting this program because there is a capitalization period. And so it might take you a few years of building up your banking system to be able to finance the full tax liability that you have. So we're going to look at this over 50 years. And we're going to pull up some taxes. And let's assume your tax liability is $30,000 a year. We're going to keep this really simple. And so we're actually not going to use this banking system to pay your taxes until the third year, when we have enough cash in there to pay the full tax liability. And so we're going to do this for 45 years. And we're going to repay this loan each year with some additional interest. So you know when you use the flexible policy loan provision, you are paying a portion of that interest to the insurance company. So a portion of that's going to the insurance company over here on the left, which is something that I am very okay with. I'm okay paying the insurance company some interest because I'm a mutual owner of that carrier. And so I'm okay paying them some interest. Now, the additional interest, in this case, we're paying ourselves back 10%. The additional 5% is going to go to add additional PUA to your policy, which is going to increase the cash value and death benefit of your policy. Now, remember, your policy only grows when premium is added. And so this is why you want to be an honest banker and learn the concept of EVA, economic value added. So with something like this, taxes, vacations, something annual that's recurring, you want to refill your policy every year. So you need to earmark some dollars that are going to go into your banking system to get it capitalized. And then when you take out a $30,000 loan to pay your tax liability, you want to replace that with some additional capital for that very next year so the policy is refilled so you never put yourself in a pinch where you might not have enough cash in your policy. So this is why you want to reach out to your Factum wealth strategist so they can get very intimate with you on how exactly we want to build this system to accomplish your goals if you're looking to do this for taxes. Now, something you'll notice is if we would have paid $30,000 in tax throughout this time period, we've paid over $1.3 million to the IRS. But because we are running this through a policy and it increases our savings rate dramatically and it offers more certainty and more control, it starts to generate more cash for you during your lifetime. Now over here on the right hand side, you could see that the cash value of balance in this policy is increasing every single single year, which means you could use this policy to make some investments, to take some vacations, to invest in your business, whatever you'd like to do. The same dollars you were going to use for your taxes can now be used for other things because you're capturing and controlling that potential of that dollar. And if we go down to the 50th year, let's assume you pass away at that time. You have recovered everything you put into this system, and now you can transfer that to the next generation tax-free. So think about the legacy play here for the next generation to set them up and empower them with a system that all of us wished we would have had set up for us.